Fresh warnings from the Reserve Bank as the global oil shock collides with inflation that's already too high at home. Matt Bones with us from ING. Morning to you, Matt. The RBA governor has spoken for the first time since the Iran conflict began.
Yeah, good morning, Eddie. That's right. And look, careful not to jump to any conclusions, of course, but the message was clear from Michelle Bullock yesterday at the AFR Business Summit that inflation is far too high here locally, and that global risk that we're seeing right now in markets is really difficult to ignore. Now, usually central banks temporarily ignore these energy shocks, which go into systems, when there are conflict in the Middle East. We've certainly seen it in the past before, but this now becomes a question of timing. Is it a matter of days or is it a matter of weeks? And certainly if it does stretch along, it starts to impact so many other parts of the economy. Business expenses get more. Aussies feel it in their hip pocket of everyday items, and of course there's lots of disruption to financial markets. We certainly saw a big sell-off overnight in the US as well. So the timing will certainly be critical here to watch and to monitor. The RBA meet again in a fortnight's time. The market previously were not expecting any rate changes until May. That was when they were kind of betting that there would be a further interest rate hike. But after the comments yesterday from the Reserve Bank and the governor, that interest rate prediction has moved from a 5% chance for the next meeting in a fortnight's time to now over 30%. So certainly the market now considering that this global risk might be much more considered than we first expected.
Yeah, it's a big jump. Thank you, Matt.